Thank you for joining me at the NASDAQ MarketSite. My guest today is David Stockman. Now, David has worn many hats in Washington, D.C., as well as on Wall Street and on Main Street. David, great to have you here today.
Very happy to be with you.
Well, we're living in very interesting times. We have the longest U.S. partial government shutdown in history. We have a lot of negative commentary coming out from Davos. And of course, we're keeping an eye on what happens with market volatility. So first and foremost, for the U.S. economy in 2019, what do you expect to see?
Well, I think we've reached the point of peak dysfunction. When Washington degenerates to the point that they can't agree on when and where to hold the State of the Union message, which is 75 minutes of hot air and hypocritical rhetoric and unaffordable promises. Anyway, they can't even agree to that. How are we going to run this government? We have $2.2 trillion national debt. The debt ceiling expires, the so-called holiday, in March, which means if they don't increase it or extend it, they're not going to be able to borrow money, and the whole thing is going to go into real disorder and dislocation. So I think there is nothing but bad stuff ahead, okay? And that's why my book is called Peak Trump, and that's why I think the bull market's behind us, the recovery is over. We're now, in the morning after, where we're going to have to reap the consequences of this massive money printing spree that we've had, massive borrowing in both the public and private sector. We had the crisis that was supposedly a wake-up call in 2008. We then had 53 trillion of debt, public and private, in the U.S. Today it's 70 trillion. We didn't deleverage anything. We didn't take advantage of the crisis. We simply doubled down, kicked the can, and the Fed and the Congress and the White House and Washington generally continued to do the same thing. So I think the people on Wall Street who are buying into this bubble, after the warning that we had in December, buying the dip, I have to wonder what they're smoking, okay? Because there is nothing but trouble ahead, and I think we're in for a huge stock market correction and political crisis. I don't even know if Trump will survive the disaster that follows. Everybody thinks, well, he seems to have survived for 2 years more handily than was expected, but you forget there was a artificial temporary bubble of 800 points in the stock market that's now being erased. In other words, he called it one big fat ugly bubble in the campaign. The S&P 500 was at 2140. Then 2 years later in September, on September 20th actually, it was at 2940, 800 points higher, and all of a sudden Trump embraces it. But I'm saying that was 800 points of bottled air that's now coming out of the system.
Well, David, you've spent a lot of time working in D.C. as well as Wall Street, so you're very familiar with a lot of the data that comes out.
Right.
Unfortunately, we may not get that GDP number that we're all watching for, and the Federal Reserve is in a quiet period right now ahead of next week's meeting. So for our viewers to understand where we really stand, you use a lot of very interesting adjectives such as the shackled Fed and greedy C-suite executives who are ignoring flyover America. So where's the real problem right now?
Well, the problem is that we're in month 115 of this business expansion. It's the weakest, most tepid recovery we've had in history, but it is now the second longest we've ever had. The longest one was 119 months. It was the 1990s, a much happier time, far fewer headwinds. So we're living on borrowed time. No one has abolished or made recessions illegal. One is coming within months, or certainly within the next year or two. And if we go into this recession with a debt deficit at 1.2 trillion, can you imagine where it's going to go after the economy goes down? If the stock market goes into this recession thinking that earnings are going to go up by another 20 or 30%, you have to ask, what's going to happen when they drop by 20, 30, or 40%? We're going to have a massive sell-off, and we're not going to have a bailout like we had in 2008, 2009. Why? Because the Fed's out of dry powder. They barely got the funds rate, the money market rate above inflation. when it should be 4 or 5%, so they got something to cut. They massively expanded the balance sheet, from 800 billion to 4.5 trillion, and they've just begun to reduce it modestly. So they're stuck with a huge bloated balance sheet with ultra low interest rates, no dry powder, and what's going to happen when we, dive into the next recession. Similarly, on the fiscal side, it's worse. No one has ever gone into a recession with a 1.2 trillion deficit,
Yes, that's true.
which actually is 6% of GDP. So there's going to be no fiscal stimulus or, salvation. There's going to be no monetary reflation. And so we're going to have an economy that struggles along the bottom for a long time. And that's going to be tough on Main Street, and it's going to be even worse on Wall Street, because Wall Street has been rescued twice this century by quick reflations when the Fed panicked and just flooded the market with liquidity, as it did after the dot-com crash, and then as Bernanke did even in a more crazy fashion in 2008, 2009. That isn't going to happen this time.
Well, there are so many cracks in the system right now, so we need to get a better idea. And just because you spent time in Washington, D.C., you served as the budget director under President Reagan.
Right.
You know how the system works. So if you could say to Trump what needs to be fixed in the current system, where would you start?
Well, I'm tempted to say what former Secretary of State Kerry said the other day. He was asked, what would you tell Trump to do? And he said, resign. Okay. Well, I'm not going to tell him to resign, but he should resign his program. His program is totally wrong. He shouldn't be increasing the deficit massively. They shouldn't have had this huge tax cut that was unpaid for. Defense, $100 billion extra for defense when we were wasting, $600 billion already. So that's the first thing. Second, stop attacking the Fed. They're trying to do the right thing. You've got to have some honesty in the financial markets. Interest rates have to be real. We need to allow price discovery to rediscover itself, if you want to put it that way. He needs to get off this trade war. I mean, this is, this is crazy. There is a huge trade problem, but it's not caused by bad trade deals, the WTO or NAFTA, or for that matter, even the Chinese cheating. It's caused by bad money. I mean, the Fed has inflated our economy to such a high level, 2% inflation. We've driven our costs, our wages so high, we're not competitive in the world. That's why we have this huge trade deficit. And actually, Trump is going the wrong way. He wants more of it, and he's going to throw up tariff barriers, which will hit, frankly, the hand-to-mouth people from red state America who shop in Walmart every week, because that's where the price increases are going to occur from these tariffs. So get rid of the trade war, get rid of the border war, get rid of the attacks on the Fed, start getting our fiscal situation under control, and maybe there's a chance that we can stabilize what is going to be a very disorderly situation.
And the narrative around what's happening with the Trump administration centers around the border issue as well as trade wars.
Yes.
But when we peel back the layers, we see other concerning things, and the risks are obviously there. Now, you've called for a double-digit percentage decline in the stock market. When is that going to happen?
Well, if I knew that, I would not have to work for the rest of my life, probably. No one really knows, but I do know we have a fundamentally unsound policy. The foundation is rotten as they come. We can't cope with this 70 trillion of debt. The households have 15.5 trillion. They haven't delevered. Business is borrowed like crazy. Business debt has gone from 6 trillion the beginning of the decade or the century to nearly 15 trillion now. But they didn't borrow money in order to buy productive assets that can help companies grow. They borrowed money in order to buy back their stock and do M&A deals that didn't pan out and so forth. So what I'm saying is that we've got so many problems that have been accumulated that at this point I don't know how they can be coped with.
Okay, David, well, thank you so much for joining me here at the NASDAQ MarketSite, and thanks for your outlook today.